Good morning, students. My name is Ravan Kumar. Welcome to the revision series for GST for C and CMA students for May or June 2022 exams. So, without wasting of the time entering into the subject, the first we are going to discuss. What are the basic concepts relating to the GST? So, first of all, what is meant by tax? So tax is nothing but it is a compulsory burden imposed by the government on the public for providing developmental activities. Here the government required to provide number of developmental activities relating to the infrastructure, hospitality, or for providing the welfare or for defense or security, etc. For providing these all things, government require the amount and that fund is collected in the form of taxes. So those taxes are generally classified into the two types. So one is what direct tax and another one is what indirect tax. So direct tax here the person pay in case of direct tax what the person pay the tax directly to the government without involving any person in between the taxpayer and the government. But coming to the indirect tax, what happens? The person collect the tax from the another party and paid to the government. So here taxpayer does not pay the tax directly to the government. He pay the tax to the government through the third party is called as indirect tax. So for example, coming to the trade cycle, so manufacturer, distributor and a wholesaler and a retailer and ultimate consumer. So here first tax paid by the government uh, first tax paid to the government by the manufacturer and that amount collected from the distributor and then distributor pay the surplus amount to the government and that amount collected from the wholesaler, then wholesaler pay the tax to the government and it collected from the retailer and the retailer pay the tax and it collected from the ultimate consumer. So here actually who pay the tax to the government is nothing but ultimate consumer, but he does not pay the tax directly to the government. He pay the tax to the government through these all persons: retailer, wholesaler, distributor and the manufacturer. That's why we call the it as an indirect tax. So in case of direct tax, person pay the tax directly to the government, but in case of indirect indirect tax, person does not pay the tax directly to the government. He pay the tax through the third party to the government. And in case of direct tax, what happened here? Impact and incidence of the tax are on same person. Nothing but what here the taxpayer and the tax bearer both are same. But coming to the indirect tax, what happened? The tax paid by the party does not bear the tax burden. The burden to pay the tax is shifted from one person to the another person, like from the manufacturer to the distributor, distributor to the wholesaler, wholesaler to the retailer, and the retailer to the ultimate consumer. In this way, the burden to pay the tax is shifted from one person to another person. The tax is said to be a what? Indirect tax. Then, coming to the direct taxes are progressive in the nature, indirect taxes are regressive in the nature. So, what is meant by progressive and regressive? So, here the nature of the tax is decided based on ability to pay. Ability to pay. For example, Mr. X earned the salary of around 15 lakhs during the year, then he need to pay the income tax to the government. As his income increases, then payment of taxes also increases. And as his income decreases, then payment of the tax to the government is also decreases. Here the payment of the tax depends upon earning of the income. So here the ability to pay the tax is considered while levying the income tax. But coming to the indirect tax, what happened? For example, you go to the shop and purchase the chappals, and the cost of the chappals is, for example, 3000 rupee. Cost is 3000, then you need to pay what GST on this product. For example, if the same product purchased by the CM or PM or any person, rich person or poor person, so every person liable to pay what this tax. So in case of indirect tax, the ability to pay is not considered. And here the rich and poor, government or non-government, So CM or common man, each and every person is one and the same in case of indirect tax. So that what is meant by ability to pay. If the ability to pay the tax is considered, then those are progressive in the nature. Otherwise, those are regressive in the nature. So direct taxes are progressive in the nature. Indirect taxes are regressive in the nature. Then coming to the best example for direct tax is income tax, and for coming to the indirect tax, so GST and customs duty. Next, coming to the features of indirect tax. So indirect taxes are the major source of revenue to the government. General direct and indirect tax both are source of revenue to the government, but among them, so indirect tax provides more than 50% of revenue to the government. On and average, 60% contributed by the indirect taxes only. And generally, it is levied on goods and services. That's why this tax is said to be about commodity tax. And the payment of the tax burden is shifted from one person to another person. Already we said manufacturer to the distributor, distributor to the wholesaler, wholesaler to the retailer, and the retailer to the ultimate consumer. And the value of indirect tax is generally inbuilt in the price of the commodity. So means generally in case of indirect tax there is no direct pinch on the customer. So what is meant by direct pension? So if for example, if you earn the income during the year, then you know the element of payment of the tax to the government. But coming to the indirect tax, majority of the persons pay the tax to the government without knowing the fact that whether they pay the tax or not. That is the main beauty in case of what indirect tax. So next, indirect taxes are inflationary in the nature because the tax inflate the price of the product or service, and indirect tax promote the social welfare. So here there are some products are there; those are called as sin goods. Sin goods stands for those goods which are harmful to the health of the human being. So generally, high rate of indirect taxes are levied on these products, like tobacco product and alcohol meant for human consumption. So due to the imposing the high rate of taxes, the prices are increased. If the prices increase, then demand is decreased. So in that way, consumption is decreased. Then indirect tax department says we promote the welfare of the public. Then indirect taxes are regressive in the nature, already we discussed. Then coming to the next one, taxes which are subsumed under GST. So generally, so GST was introduced on 1/7/2017. GST was introduced on 1/7/2017. Then before implementation of the GST, there are number of indirect taxes are there, like excise duty is there, and service tax is there, and CST central sales tax is there, and VAT, and customs duty, octroi, and luxury tax, luxury tax, and entertainment tax, and betting tax. So a number of taxes are there in indirect tax before introduction of the GST. So here each tax imposed by showing different taxable event. So what is meant by taxable event? The activity based on which tax liability is created is said to be about taxable event. So excise duty is generally used based on manufacturing of the goods. Service tax imposed based on provision of the services. CST is levied based on interstate supply of goods. Nothing but supply here is nothing but what trading. Interstate trading of the good means if the goods are traded in between the state. So if the goods are traded within the state are called as intrastate purchase and sale of goods. Then we impose what VAT. So on imports and export of the goods we impose what custom duty, and based on the movement of the good we impose a off track, and providing luxury then we impose luxury tax, then entertainment for then government impose entertainment tax, and for betting lottery gambling betting tax imposed. So here these are the number of indirect taxes are there before introduction of GST. Then with effect from the 1/7/2017, so GST was introduced in India. In that case, all indirect taxes are subsumed under GST. So excise duty subsumed and service tax subsumed, CST and VAT and octroi and luxury tax, entertainment tax and betting taxes. So majority of the indirect taxes. So indirect majority of direct taxes are subsumed under the purview of GST. So except what? Customs duty. Except customs duty. So generally coming to the customs duty, generally three basic taxes are there. One is basic customs duty, countervailing duty and special countervailing duty. So generally, so basic custom duty is not subsumed under purview of GST, but coming to the countervailing duty and special countervailing duty are subsumed under the purview of GST. So countervailing duty means what? For example, if the similar product, whatever the product imported from the outside India, if similar product is manufactured in India, then we have to pay what? Excise duty. To counterbalance the excise duty, so a countervailing duty is imposed at the time of importation of the product. In the same way, if the imported product or similar product is traded in India, generally we government impose what? VAT or CST or the local taxes are imposed. So, but when the product trade or when the product purchased from the outside India, nothing but in case of importation of the good, then no taxes are imposed. So due to that, the price of the domestic product are increased. So to secure the domestic product and to counterbalance the local taxes imposed if similar products are traded in India, special countervailing duty is levied. So countervailing duty is levied to replace what? Excise duty. Special countervailing duty is levied to replace what? VAT or CST. So these excise duty, VAT or CST are subsumed under purview of what? GST. That's why coming to the customs duty, countervailing duty and special countervailing duty are subsumed, but basic custom duty is not subsumed. And some more taxes are there which are not subsumed under GST. Taxes, taxes not subsumed under GST, like excise duty on alcohol meant for human consumption and basic customs duty relating to the customs duty and stamping duty and entertainment tax levied by local authorities and road taxes and municipal taxes, etc. These are all not subsumed under purview of GST. So these are what is the which taxes are subsumed under GST, which taxes are not subsumed under GST. So in case of these all taxes, some taxes are levied by central government and some taxes are levied by state government. Because in India we have three-tier federal system. So taxes are imposed by central government and some taxes imposed by state government and some are imposed by local authority. Okay, these are the taxes subsumed under GST and the taxes which are not subsumed under GST. Then, okay, so clearly stated. So in case of customs duty, only countervailing duty and special countervailing duty, special additional duty are only subsumed under GST. But basic custom duty is not subsumed. Basic custom duty is not subsumed. And first of all, so what is the need of implementation of the GST in India? So why the GST was introduced in India? So some reasons are there. So GST, so is a cure for all else of previous and existing indirect taxes. The first one is what a non-integration of VAT or service tax causes double taxation. So, for example, you go to the restaurant and purchase the food, and the cost of the food is around cost of the food is around for example 500. So this 500 include what element of the food as well as element of the service, element of the food as well as element of the service. So means whatever the rice, masala, gas, and whatever the items used are covered under the food and means good, and the remaining so nothing but making services, serving, and providing the other services, etc. These are all covered under service. But here, in case of food, we levy what VAT or CST. In case of service, we impose what service tax generally. So here, that VAT cannot be adjusted or cannot be set off against a service tax, and service tax cannot be set off against the VAT. So no integration, non-integration of VAT and service tax causes what double taxation. Causes what double taxation means on that 500 first VAT is imposed, and again we impose what service tax. Then due to that the price of the product is increased. And another one is no VAT credit after manufacturing step. So if you observe the trade cycle, so manufacturer and distributor, wholesaler and retailer and ultimate consumer is there. So here the manufacturer is liable to pay what excise duty to the government, and at the time of sale, for example, manufacturer, for the manufacturer cost of the product is 1000 and the value of the product. So for example, excise duty at 10%, 1100 is there. At the time of sale, he imposed what VAT at 10%, 110. So the total 1210. Here, the taxes are imposed. If you observe the VAT, VAT is levied at 10% on 1100. This 1100 is inclusive of 1000 and 100. So here, this 100 is what? 100 is nothing but what tax. So this 110 is nothing but what VAT. So tax imposed on the tax. Tax imposed on the tax. So due to that, so the price of the product is increased. And another one more thing is this excise duty cannot be adjusted against VAT, and VAT cannot be adjusted against excise duty, because excise duty is levied and collected by central government. VAT is levied and collected by state government. For setting off of the taxes, both should belongs to the same government. Both should belongs to the same government. Clear? And another one, for example, if the wholesaler is in AP and the retailer is in Tamil Nadu. So here, at the time of selling of the product by the wholesaler to the retailer, he collects the VAT, then he collects what CST, and while purchasing the here distributor is also located in AP. While purchasing the goods from the distributor collect what VAT. Distributor collect what VAT. So here GST cannot be adjusted against VAT. CST cannot be adjusted against VAT. So here central tax cannot be adjusted against state taxes. That is one of the drawback. And the existing indirect tax framework in India suffers from various duties and taxes at central as well as state. Number of taxes and duties are there. No non-availment of seamless ITC. So already we discussed. Coming to the manufacturer and distributor, wholesaler, retailer, and ultimate consumer. In case of excise duty and service tax, there is a one concept called as VAT credit. But the VAT credit is allowed only to the extent of manufacturer. From the distributor onwards, VAT credit is not allowed. Then rate structure, number of rates are there. So due to these all reasons, so GST was introduced in India. So GST was introduced in India. Okay. Then coming to the GST. So GST stands for what? So goods. So GST stands for what? Goods and service tax. That is nothing but tax on supply of goods or services or both in India, except alcohol meant for human consumption. So remember, some products are not covered under purview of GST, and one of the product is alcohol liquor meant for human consumption. Alcoholic liquor meant for human consumption. So what is meant by good and what is meant by service, we will discuss later. And coming to the supply is nothing but, so previously we discussed, so while imposing the taxes, there is a taxable event. In case of excise duty, manufacturing of good. In case of services, provision of services. In case of CST or VAT, trading of the product. In the same way, coming to the GST, the taxable event is nothing but what? Supply of goods or services or both in India. So supply includes these all things, but actual definition of the supply is provided under Section 7 of the CGST Act 2017. We will discuss in the next topic. So, but coming to the supply, so these are classified into the two types. Supply is classified into the two types. One is intra-state supply. Another one is interstate supply. So intrastate supply is nothing but if location of the supplier and the place of supply are in same state or in same union territory is called as intra. Simply said, if the product is traded, if the product is services supplied, so within the state from one person to another person is called as intrastate supply. If location of the supplier and the place of supply are in different states or in different union territories or in one state and another union territory. So if if the location of the supplier and place of supply is located in different states or in different union territories, or one in one state, another in another union territory, said to be about interstate supply. Generally, intrastate supply is liable for CGST and SGST. In some cases, in case of in the place of SGST, they imposed UTGST. They imposed what? UTGST. And interstate supply is liable for what? IGST. Interstate supply is liable for what? IGST. Okay. Then coming to the CGST. CGST stands for what? Central Goods and Service Tax, and it was levied by central government as per which act? CGST Act 2017, and it applies to whole India. It applies to whole India. Then coming to the SGST, so it is levied and collected by state government and is imposed as per SGST Act 2017, and it applies to all states, territories, and including union territories having separate state legislation. So that is nothing but Delhi and Puducherry and Jammu and Kashmir. So these are covered. Okay. And coming to the UTGST, it was levied and collected by central government and levied as per what? UTGST Act 2017, and it applies to union territories not having separate state legislation, and that is nothing but what? Andaman and Nicobar Island, Lakshadweep, Chandigarh, Daman and Diu, and Dadra and Nagar Haveli. So Daman and Diu and Dadra and Nagar Haveli and Ladakh. So these are all covered under UTGST. Coming to the IGST, interstate supply. So it was collected and levied and collected by central government, and it is levied as per what? IGST Act 2017, it also applies to whole India. So generally here IGST is nothing but what? This is the combination of a CGST and SGST. So here the element of SGST later will be transferred by the central government to the state government. Okay, so here, so supply intrastate supply is liable for CGST and SGST. And if you observe this, so both the government, central and state government levy the tax directly on supply of goods or services. That's why we call it as what? Dual GST. So India adopt what? Dual GST. Interstate supply is liable for what? IGST. So IGST is nothing but summation of CGST and SGST and is levied by central government. So what is meant by intrastate supply and interstate supply? Those are depends upon two factors: location of supplier and the place of supply. If location of supplier and place of supply are in same state or in same union territories, intra. If they are in different states or different union territories, said to be inter. And the legislative framework. CGST is levied as per CGST Act by central government. Interstate supply applies to whole India. SGST is levied as per SGST Act. 31 acts are there in India. So SGST or union territories having separate state legislation and intrastate supply. And same way UTGST is levied as per UTGST Act and levied by the central government, and it applies to these all things. And IGST is levied as per IGST Act. Okay. And coming to the GST, it does not apply on the all goods. So GST generally levied on supply of goods or services in India, but coming to the some products, it does not apply. So best example is alcohol meant for human consumption. So in case of alcohol meant for human consumption, previous taxes are levied even present after the introduction of GST. So it is not covered. And other, for example, if alcohol is used for medicine, then that is covered under GST. That is covered under GST. And along with that, some products are stated clearly, like petroleum products are. So petrol, diesel, motor spirit, natural gas, and ATF, aviation turbine fuel. So these are all covered under purview of GST, but with effective from the date notified by central government. But till now, the date is not yet notified. That's why these are also covered under what? Non-taxable supply. So taxable supply includes so petrol, diesel, motor spirit, natural gas, and ATF, along with the alcohol meant for human consumption. On these products, previous indirect taxes are only imposed. Then tobacco product. Tobacco product is liable for both GST as well as central excise duty. And opium, Indian hemp, and other narcotic drugs are also covered in GST, and along with that excise duty is also levied by state government. So real estate sector, remember purchase and sale of the land is not covered. Purchase and sale of the land is not covered relating to the movable property. But the transactions involved in relation to the land, but land trading are covered. I will explain later. And all services are covered under the purview of what? GST. So here we discussed what is meant by non-taxable supply. It includes these two. Alcohol meant for human consumption and 5 petroleum products are covered. So this is the constitutional provisions. Then so compensation says we will discuss later. So actually in compensation says what happened in case of interstate supply, central government levy what? IGST. So that IGST is including what? CGST and SGST. The element of the SGST compensated and transferred by the central government to the state government at later point of time. Okay, and coming to the, so India has adopted what? Dual GST, which is imposed concurrently by central and state government. So already we discussed. And GST is a destination. Generally, there are two types of taxations are there. One is origin based taxation, and the another one is what? Destination based taxation. So, for example, Mr. A belongs to AP, he sell the product to the Mr. B belongs to Tamil Nadu. At the time of selling of the product, along with the product, the tax revenue is also transferred from AP to Tamil Nadu. That is called as a destination based, where the product is destinated, where the product is consumed. So to that government, the tax revenue is transferred completely. Tax will be payable in the state in which goods and services are finally consumed. Then, coming to the order of utilization of ITC. Okay. So, in case of CGST, in case of previous indirect tax, one of the major drawback is nothing but what cascading effect. So that cascading effect is nothing but increase in the price of the product. That increase in the price of the product is eliminated by using the one concept called as input tax credit. So input tax credit is nothing but the process of adjustment of the input tax against the output tax while making the output tax to the government. So here input tax means what? Input tax is nothing but tax paid at the time of receiving the inward supply of goods or services, and output tax is nothing but tax collected at the time of outward supply of goods or services. And whatever the tax you collected will be deposited to the government. Before depositing the tax to the government, you have the option to reduce the input tax. The process of reduction of input tax from the output tax is called as what? ITC. But which tax can be adjusted against which tax? So that is the order of utilization. Coming to the CGST paid, it can be adjusted against what? First CGST payable, and if any surplus, it can be adjusted against IGST payable. But coming to the CGST cannot be adjusted against SGST and UTGST. SGST and UTGST. Okay. Then coming to the SGST. SGST first utilized against SGST paid, and later can be adjusted against IGST but cannot be adjusted against CGST. Same way UTGST first adjusted against UTGST paid and later IGST but cannot be adjusted against the CGST. Coming to the IGST paid, clearly stated the surplus of IGST paid available. The first IGST paid first adjusted against IGST payable. After complete utilization against IGST payable, if any surplus of IGST paid available, it can be adjusted against either CGST or SGST in any order or in any proportionate. Nothing but first SGST, later CGST, or first CGST, later SGST, or 50% SGST, 50% CGST, 60% CGST, 40% SGST. You may adjust in any order or in any proportionate. That is stated. This is the order of utilization of ITC. Okay, so these are the advantages. So there is no cascading effect due to the cascading effect eliminated by using the one concept already we discussed called as ITC. Tax collection must be easier than the same easier as on the same transaction because both CGST and SGST will be levied. Okay, and currently excise duty is levied by manufacturing on good, VAT is payable on sale of good. But here, so see, central government and state government levied only on one taxable event, that is nothing but what? Supply. And GST aims to make in India a common market with common tax rates and procedures and remove the economic barriers, thus paving the way for integrated economic at national level. And then and here various forms are also not required. Previously, in case of CST for applying the low rate of taxes, forms is required, but at present that type of forms are not required. And the transaction cost and time for compliance will be subsequently reduced as the SSC does not have to comply with the requirements laid under different statute. And the GST will give major boost to Make in India initiative, and GST expect to bring buoyancy to the government revenue by widening the tax base and improving the taxpayer compliance. So this is what are the basic concepts relating to the GST. So we will upload the videos in alternative days, and we will complete the all GST topics relating to the CA and the CMA at all levels, inter and final levels. Okay.